Moving ahead, ladies and gentlemen, the second panel discussion is about to begin, and the topic is building tech-resilient banks. It's my privilege to invite on stage the panel speakers for the session, Shri Rajashekara Vemaya, Vice President and Global Head Business Consulting, Infosys Finacle; Shri Mahendra Dohare, Executive Director, Central Bank of India; Shri Anil Kuril, Chief Technology Officer, Union Bank of India; Shri Vikrant Sabharwal, Director Business Development Sales, AMEA TSYS; Shri Arpit Ratan, CBO and Co-founder, Scienzy. Please welcome. And our moderator for this session, Shri Milan Mitra, partner, McKinsey & Company. Over to you, sir.
Thanks, everyone, for making the time, and thanks to the organizers for a wonderful event. So just to get started, this is a very sort of in-trend topic, technology resiliency for banks. And maybe just to set the context, I'll just try and quickly frame the topic. It would be great to sort of get some quick reactions. I think three quick points to make. Number one, banking has been at the forefront of adopting technology, which has obviously resulted in increased scale, increased satisfaction index. But at the same time, not doing it well has also resulted in a lot of pitfalls for banks, and not doing digitization the right way has its own sort of failure points, if you will. Right? I think the point was also coupled with the increased imperative on social media, transparency, expectations of customers to have 24/7 channel availability. This is now a here and now topic. I think over the next 30 minutes would be terrific to get your thoughts on how the industry is evolving, how banks are looking at it, as well as the other side, the supply chain, vendors, providers for the banks. How is this whole space evolving, right? But I'll start off with Mr. Kuril yourself. I think just would be great to get your thoughts on fundamentally why should banks look at tech resiliency as a strategic imperative rather than an operational necessity, right? Just to open the floor, over to you.
Yeah. So thank you, Milan, and good afternoon, ladies and gentlemen. I think when we are talking about the tech resiliency, we have to actually look one level above. We as an organization need to have operational resilience. Now, when it comes to the operational resilience, obviously tech resiliency is a component of that. Now, in terms of a tech resiliency, if you look at it, it is nothing new. It existed over a very long period of time, the day we started the computerization and till today. When we look at the processes in and around, they are all there. It's people, process, and technology, if you actually talk about that part of it. When you look at it, what is it which we are talking about? We are simply saying the way we are doing IT, we have to do it right. When it comes to the putting the architecture, we have to make it a scalable. We have to make it sustainable, and also we have to make it observable so that we know that what is happening in your system and processes. Second part is that when you are buying a software or building your own software, how you do it, what you look into that. Now that is another part of it, that in case we are buying it software, which necessarily means that we believe that our service provider, they are looking all those components which make their software resilient. On the other part of it, large banks, they have a very big facility in terms of developing their own software. And those software, not only they are for your internal consumption, but large part of this software also serving to the customers. Now, when you are developing a software, are you following those standards? Are you following those practices? What you do that? Similarly, in terms of a system resiliency architecture, do you have a zero data loss? If something goes wrong in your system, do you have a capability not to lose the data? Or even if you are ready to lose the data, what amount of data you are ready to lose? So those are the aspects. When you look at closely, you will find that these are all existing since beginning. Some of us, obviously, we are not doing correctly, and the impact was not felt by us because majority of our processes were manual, or they were partial manual. So it was not. But now we have come to a stage where everything seems to be feasible. Customer expect everything on their fingertips at the time, when they want, where they want, and what they want. So that is the stage where we come. We have seen the people talking about the generative AI. So all those things, and that has shaped the customer expectation as far as enterprises are concerned. Now you are no longer able to operate if you are not able to provide the services through their choice of channel and also the place of their requirement. Now, in terms of a resiliency component, if you are putting those processes appropriately, there are basically, you have to build a right infrastructure, right architecture. You have to have a right observability amongst, and third, you have to have see that the infrastructure which you have built, how resilient is. For that, do you have a run book to test your system? Because majority of we say that we are doing a DR. But in a real disaster scenario, whether you have a capability to actually move to the DR or not, those kind of a testing has to be done. Like in our environment, we are saying that if I shut down all the system, whether my branches have a capability to provide the services to the customer or not, that is, I think, the stage we have to navigate that part of it. Are we there? Probably we may not be there, but this is a journey which we have to take it. So that is what my take on
No,
that.
that's
Thank
a great
you.
point you're making. I think broadly you're saying is, while it is a strategic imperative, it's very much back to basics, doing things the right way, right? Mr. Maya, over to you actually. On that point, it will be terrific to understand as a core sort of key provider of the overall stack, how has this space changed? Has anything fundamentally moved in the space in terms of how it was being done versus how it should be done? I think would just to love some thoughts on that.
Thanks, Milan. I take this opportunity to thank Indian Banks Association for providing an opportunity to be on the panel. So as a core service provider, we have seen significant changes in the way the banks are trying to implement and use and leverage the technology. If you now look at in terms of a straightaway question to be answered, the largest employer in the world, if you ask anybody, they keep talking about the Walmart or Indian Army, Chinese Army, but that is not the answer. The largest employer in the world is inefficiency. So what has happened in the previous era, people tried to use the technology to plug those inefficiencies. But these inefficiencies are plugged at the surface level. They're not being plugged at the operations level. So in the recent past, if you now look at the COVID, has exposed many of those surface level fixes in a significant way. US had a trouble even processing 90 million checks to be distributed to the citizens as a support, whereas India had distributed $10 billion to 420 million citizens, plus on top of it, 800 million people being supported on the ration on a free basis. So how this significant change happens from the back-end perspective is moving the technology in addition to what is happening in the industry. Earlier, when I started my journey, I'm a chartered accountant, I used to audit banks. And that time, for the first time when the manual things are getting translated into mechanization, I don't want to call it as automation, I was faced with love. Love is L-O-V-E, not the love that we are going to talk in Valentine's Day days, but it is the loss of visual evidence. Because I was exposed to the ledgers and the journals and the documents, and suddenly all of them are in a black box. So how will I now evaluate the performance of a branch or a bank just using the digital technologies? And the alternative is not to go back to the manual system. Similarly, when banks are moving towards the cloud environment, if something goes wrong from a resiliency perspective, if some cloud service provider activities are hampered, the alternative is not to go back to on-premise. It's to look at the other alternatives of how to take it to a next level. So like Alin mentioned, the disaster recovery has been so far thought through only from the perspective of a natural calamity happening, an earthquake taking place, some floods taking place, and your data center is not able to be accessed. But that is no more a disaster recovery now. The disaster recovery is now like what has happened in the Europe. In 2021, when Russia invaded Ukraine, and the activity of Ukraine invasion did not start in February 21st or 22nd. It actually happened much before that from the perspective of a lot of European data centers, central banks, the government organizations getting attacked cyber way. And in fact, I had a conversation with one of the official in the Delhi, and this is regarding when we were having some altercations with the Chinese authorities in the border. They could sense this physical activity on the border based on the last 3 months of the cyber attacks that are happening on the Indian websites. So the battle is now moving more towards cyber attacks, and how will you build the resiliency there so that in the eventuality of not a flood or a earthquake taking place, but there's an attack on a digital repository of your country, how do you control that? That's why if you now look at in terms of European Union joined together in 2022, they came out with a specific act called as DORA, the Digital Operation Resiliency Act, which is going to be mandatory for all the members in the European Union to implement that going forward from 2025 onwards. So you can expect many more such things coming into picture in other countries where we have these kind of challenges. So to answer your question, as a technology service provider, we are not stuck to the legacy. We have also moved in time with being the cutting edge and also providing, anticipating, and envisaging what's going to happen. And that's why if you now look at whatever I mentioned about the $10 billion distributed to 420 million accounts, or even the 510 million accounts that got opened as part of Jan Dhan, or in terms of having 12 billion transactions every day in a UPI, which results into 400 million transactions every day on an average. This is the kind of move that has happened in the technology, and we have to make sure that as a technology service provider, we keep up ourselves to the technology and as well as the change that are taking place.
Got it. Thanks. Love your point about inefficiency being the biggest employer. So, Vikrant, maybe just switching topics a little bit. Given resiliency is also a key point for customers in terms of availing 24/7, end-to-end journeys. Given you are playing in this payment service space as well, would love your thoughts on how do customers perceive the importance of resiliency when going through this, especially multi-step payment journeys, and especially unavailability of it, how does it impact the other side, right?
Yeah, sure. Thanks, Milan. So again, putting another perspective, coming from a technology company on the objective of this panel is, like we've again been discussing, and we've seen that customer preferences continue to change rapidly. Customer behavior, the way they want to, let's say, in the retail space, want to pay, that continues to change rapidly. The whole digital approach, so we've seen transactions or, let's say, things which are coming in move from the traditional channels to the digital channels to such a point where I think digital has now outgrown or even outpaced what it is there, traditionally. So in such a scenario, do banks need to, let's say, build a tech stack themselves? Do they need to deploy a huge army or a huge team of, let's say, developers, engineers to keep pace with this change? Do they do it themselves? Or does it make sense for them to, let's say, outsource to, let's say, a cloud native or a SaaS provider who can do this quickly, more efficiently, speed to market and things like that? So that is one question and that is one perspective. On the customer side, the resilience, again, like we've seen that people's attention span continues to reduce. So I was at a meeting the other day and someone was saying that we have to be faster than the speed of Wink, because if the customer is on your app and if it doesn't respond, if there is some latency or something, and if he gets the chance to move his eyeball to somewhere else, he's gone, he's lost. You've lost that transaction, you've lost that business. So it is, you've got to beat this power of Wink to sort of be there. So which is why resiliency, latency, those things are there. And again, you need the latest tools, which again, a cloud native stack can sort of offer you that, the APIs to sort of power your front end, give all that information readily available, power in the customer's hand. So that is where this whole sort of thing comes in. So from a technology provider, again, we say that rather than doing it yourself, again, an earlier panelist in the day said that we still have a lot of technology debt. So we are still using COBOL mainframe-based systems of the 80s, and what we're trying to do is do wraparound around them, which will again bring in those issues around how good this is or how resilient it is or what are the latency, those kind of things. So the way forward that we see is to have, let's say, a cloud-native stack built on the latest technologies, and from a provider who can do this for you at speed, scale, and securely as well. So yeah.
Yep. No, that's a great point you're making. I guess the decision between buy versus build, as we move from these traditional stacks into more modular stacks, that's a key sort of decision point. Maybe Mr. Dware, that's a good segue into the next part of the conversation. I think banking stacks have also evolved. It's an evolutionary journey. It has moved from monolithic to distributed to microservices and so on and so forth. And as banks have moved through this journey, fintechs and newer players have been an important part of this journey, right? I think would love your thoughts on how does the bank balance between the traditional stack and the modern stack, especially in the context of the modern stack fintech players. What are the risks associated to it? What should one be mindful of, right?
See, particularly with respect to banks, banks already have a very well-established risk governance framework. So as such, there is no issue. So in fact, many of these cutting-edge technologies or exponential technologies are already bank have implemented or in the process. Though the scales we will come to know gradually as the time goes up. And particularly in the PSU banks, there are committees at the top level like IT strategy committee of the board, IT risk management committee, which ensures that the associated risk with these products are aligned to the risk appetite, their business strategy, and their resources, right? But as these technologies are evolving, it is very important, and banks have taken adequate steps because risk being a dynamic process, the training and development and upskilling of the employees are extremely crucial, which banks have already on the right track. And in fact, many of the specialized jobs for these kind of cutting edge technologies, recruitments are happening in the even PSU banks for the specialized domains that is taking care of the risk which may emanate, right? Then I think there is a lot of collaboration is happening with the industry leaders in these exponential technologies, with the discussion with the peer banks or the peer technologies companies. The collaboration is going on, which is taking care of the technology gaps even in the PSU banks also. Further, the regulator is also very concerned. Like if we refer to the regulator's circular of last year of 7th November, which talks about IT governance, risk control, and this assurance practices, which comprehensively talks about IT and service management, BCP, DR, cyber security management, IT system audits. Similarly, there are guidelines on IT outsourcing, and then this payment system and control risk, and how to get those risks managed. And these guidelines are very comprehensive. It mandates the minimum standards and protocols to be followed so that we remain compliant to these guidelines. And if our governance structure keeps on getting robust and we remain compliant to these compliance guidelines of the regulator, and we collaborate with the best industry leaders, so definitely these technologies we would be able to manage the risk, and we will see the reap the benefits of these technologies in the interest of the customers.
Understood, understood. So I think broadly what you're saying is the risk guardrails are present.
Yes.
It's not a new thing.
It's not a new
It just,
thing at all.
again, to point Mr. Kuril mentioned, it's back to basics and doing things the way it is written down and supposed to be done.
Yeah,
right?
so if the basics with respect to risk we talk about, so basic tenets of tech we can't ignore, whether it's upgrading or modernizing our tech stack, or taking care of our cyber security measures, or regular DR drills, or the BCP and this risk management relevant practices on an ongoing basis. Those things cannot be ignored even for these technologies which we are adopting now.
Yeah, no, that's a very valid point, I guess. Maybe Arpit, at that point, I think it's a very, synonymous thing with the space that you are in as well, especially operating at the channels which are often at the forefront of what the customers experience. what would be your reflections on what's working, what's not working, what is the way to go? Would love some thoughts and reflections.
Yeah, no, I think some of bounce off what I've been hearing from the panel. I think in one way the world has truly changed when it comes to customer onboarding is that you no longer have one application, right? In a country like India, you to onboard a customer now or to build a customer journey, you have to work with multiple other data providers applications. So you have a PAN, Aadhaar, account aggregator, a bureau, an e-sign. So if you think about it, these are now multiple micro applications. So resilience is no longer about having a BCP in terms of another data center, but if any one of these micro application fails, then your customer journey stops working, and it has happened multiple times in India where sometimes that data provider is not working. So therefore, when we talk about resilience, it now has to be about, can we create alternative micro applications or alternative flows to customer journey, so that even though if one provider is down or one certain micro application is down, our customers can still complete the business process or the services. And I think this is where fintechs or techs can really help the banks, because if you have to create now multiple micro alternative applications, it will be very hard to build grounds up for any bank or any organization for that matter. And there are providers which are in that micro space. They have built resilience in that micro space. So it is better to, bank can still own the large environment, but I think it makes sense for banks to also then partner with these micro providers, so that as a whole system for the bank, it is far more resilient, both in terms of a BCP, because you can have multiple fintech partners providing the same service and you can keep switching between them, and also in terms of scalability and resilience, because if I'm as a provider just doing a microservice and being very good at it, I will of course do it better at scale than one bank.
Yeah, no, very, very valid point, I guess. By the way, I think just to the point that you mentioned, I think I just want to direct that question to Maya and Vikrant. I think what you mentioned, Arpit, was also it's a very useful to have a successful collaboration model between banks and fintechs and banks and providers in general, right? What would be some of the examples, do's and don'ts that you would have seen in this space? What works, what doesn't work? So that one is aware of the pitfalls and the guardrails, if you will, right?
Yes, Milan. I think one of the examples that I can quote from the Indian context is way back in 2016, when the blockchain as a technology was picking up and a lot of conversations around blockchain as the potential to change a lot of things, improve transparency, improve security, safety, and the cheaper way of adopting technology. Common-minded banks came together in India. And they formed a consortium, probably perhaps that is the first time when the banks which are competing otherwise, they came together to a table and they said that we want to leverage this technology ahead of any other industry. If you now look at historically, all technologies, the bankers were the laggards in terms of adopting that, whether it is mobile or internet or even for that matter, the erstwhile internet technologies. But blockchain is the only technology where banks were ahead of any other industry from a use case perspective and as well as implementation of that. And Indian banks came together and they wanted to collaborate with a technology service provider, a solution provider. So we had that opportunity and privilege of partnering with them. And this led to a situation where they decided that this has such a potential for the country as a whole in terms of moving from an inefficient way of doing trade transactions to a much more digital and inter-organizational automation capabilities. And they brought in other technology providers also, and we launched this solution for India Trade Connect. And today, if you now look at, from an autopilot mode kind of a situation, that consortium and the technology is expected to solve more than 70% of the problems that are existing in the trade finance area, the trade area. And is going to bring down efficiencies, and they're going to manage more than 80% of the business in India, and that model can be replicated elsewhere. And this is one such example where the cutting-edge technology, the consortium of coming together, the banks, working very closely in collaboration with the technology providers like us and the cloud service providers and the underlying DLT service providers, and launching a solution and also creating a company separately. This is the first time where the business model has been envisaged using a technology, and a company was formed, and now it is getting in operational. So this is the example that I can quote, where you have a technology and you have the intention, you realize the potential of that, and come together to form a consortium and then launch it.
Very well. Vikrant, any other examples that come to your mind?
Sure, I would like to sort of give two over here. One is more, let's say, on the technology side, being a sort of provider. So again, we've seen how technology companies look to modernize and innovate, and specifically for the payment space, which was typically or traditionally run by large mainframe systems, which were very good at what they did, but were very sort of rigid and bulky and did that only in a particular way. Now, the collaboration that we did is that, let's say, being a first mover of, let's say, a technology company or a payment system coming together, re-architecting it, making it cloud native, and using all the cloud tools. Yeah, so that big monolith was broken down. Again, the word that you use very commonly is microservices. Break them down into smaller microservices so that you can chain them separately, and then you can sort of build on that, or you could offer that as a separate thing as well. So even, let's say, for banks, for their businesses as well, the opportunity for them to break down their entire offering and offer small microservices to compete against the new age fintechs and all. So this again can get provided, or let's say a cloud native application will be able to, let's say, better deliver this as compared to, let's say, a large monolith wherein it would take a huge time for you to, let's say, upgrade or you change. So that speed to market and that agility sort of gets missing. So that is one. The other thing that we've seen in terms of collaboration, again, given the space that we've seen, that how the industry is changing, the customer mindset is changing, people's thought process is changing, is something banks need to sort of see what will merge or what will work well with their brand, what is it that they're promoting. So things that we've seen with today's Gen Z or the coming up Gen Alpha, they are more focused on things like ESG, environment is a big thing for them. So we've again collaborated with companies which provide, let's say, sustainability as a service going forward. So it's not only about, let's say, your spends, but there are tools today in the market which can actually tell you your spends, how does that translate into carbon footprint. You can actually see, let's say, the purchases that you do, what is the carbon footprint for that. You could also, let's say, things like if you're a frequent flyer or you're buying a lot of, doing a lot of online shopping, the carbon footprint that sort of it creates. And then you can go one step further and also bake in solutions or sort of tell them how is it that they can offset this, this environmental or this carbon footprint that they're doing. So maybe they could donate to some environmental organizations to sort of offset that carbon footprint. You can also offer them some consultancies or some products which are ESG related or ESG linked. So again, this collaboration is again between banks and technology to sort of address a growing need, and again to sort of grow the ethos of the bank of how it is responsible, how it is sort of in tune with today's technology. So those were just two examples that I thought from a technology provider.
Very helpful. No, very helpful. I think that's very thematic as well. Mr. Goel, just to pick your brains on this, skills and talent needed to do this well, right? Resiliency, obviously, the demand on what the banks needs to offer to be able to, resume operations, quick recovery, needle in a haystack problem. Just any quick thoughts on, is there a particular shift in the skills needed by the banks, and how are you seeing the supply chain gap sort of being addressed?
Yeah. So Milan, when we talk about the skills, for any IT company or even for the banks today, you require a relevant skill sets within organization. And in case you have a gaps in the skill sets, obviously you should be open to acquire those skill sets from the market. So that is the one setup. Second, when it comes to the skills, you are only not required the new age skills, but you also have a capability to manage your legacy system, because in an organization which have grown over a period of time, you have mix of all technologies. It's a legacy technology as well as the newest technology. So obviously you have to take care of both the side of the chain so that you are able to do it. Third aspect is, when you look at the skill gap, obviously you are finding that there is a more skill set gap in terms of a new age technologies are concerned, and that's why you have to put a specific focus around that part of it. However, when we are talking about all those things, you as an organization, we need to all understand that since looking at the digitization which has happened and going to happen, you require a large set of people with the diverse skill sets. These skill sets not only on the technology side of it, but also from the management side of it. So ultimately, when you are creating the practices within the organization, you have to take care of this part of it. Second aspect is, when you are building the skill sets, you also need to ensure that in certain areas, you create the practice where you are able to practice those areas. I give one example. In a cyber security area, we build the run books. Now we all understand that training everybody is an aim for organization, but it may not be feasible for you, and it's a long drawn process also. However, can you stop your operation? Probably the answer is no, which means that majority of part of your operation, if you are able to put through the system, then you are able to take care of that skills gap also. One thing, like you said, that gap in the market, when we look at the market for acquiring the skill sets, obviously there is a gap. Although there are large number of people available, but whether they have those kind of skills which organizations are needed, then the answer is there is a gap. One third part is that while we rely on the newest technology for the market skills, however, as an organization, you have to also build within the, and some of the aspect around this is putting a standard best practices in your organization. I gave one example. Now we have very large software development facility within the Union Bank of India. Now, almost 60% of my software is in-house developed. Now, when we are using this large number of software, we have to ensure that the practices which we follow are as per the international practices, and we follow that. So that's why as an organization, we are ensuring that the practices which are there, whether it's a BCP, whether security, whether software development, whether enterprise architect practices, whether operational resilience, they are all certified with the international standards to ensure that as an organization, you are meeting a requirement and also having a capability to continue your operation, all that. And I think that is what as an organization you have to do it. In terms of a Union Bank of India, or for that matter any bank, I think skill set strategy or ensuring that you have right skill, there is a specific focus need to be put in place. Like in our organization, we have created called a Union Learning Academy for Digital, which means that all 365 days, their job is to skill the people on the digital technology itself to take care of those gaps.
It's very insightful. I guess what you're saying is there is a conscious effort to first acknowledge the gap, identify what's missing, and then address the gap, right? Super helpful. Maybe last question from me to Mr. Dohare, and then Arpit would love some closing thoughts, is how should banks think of resiliency as a competitive advantage, either it is for branding or for customer consciousness, or just how should one think about the external aspect of it, and as one sort of matures in this journey?
See, resiliency from external aspect, see, banking is a business of customer trust, right? So resiliency is extremely crucial for the banks with respect to particularly this data breach or cyber security. Any mishap is going to we are going to lose the customer trust. So customer is also interested, or customer want to get their trust or confidence enhanced on the banks, right? So this will only come through the resiliency or operational resiliency, which depends on your IT modernization, taking the right steps, involving your team and developing them through the training programs. Even if we are, as Mr. Kuril said, recruiting the people or training them. But there are challenges on that because we are recruiting domain expert, but there is no defined career path for them, particularly in the PSU banks. So there are issues of attrition also, but resiliency as such, because it depends on the your future or the future strategies of the bank to enhance their skills as well as business. So when we talk about resiliency, it directly impacts the business and customer trust. So those steps has to be taken in the right direction to maintain the resiliency on an ongoing basis, which requires your IT modernization, your cyber security measures, and skill development of the employees on ongoing basis.
Got it, got it. Arpit, some closing thoughts on this point. As a, you're involved in build as well as run, just the two big aspects. Do you see a fundamental difference in being able to acquire talent, retain talent, specifically with respect to operational resiliency part? Because the build we have all seen, that is where a lot of focus has been over the last few years.
Yeah, I think two parts, since I'm also kind of closing a lot of discussions we've had, but I think two parts of the discussion. One is we've all understood that resilience is no longer what it was 5 years ago. We are no longer talking about having just a data center. So physical resilience is no longer what we are talking about. In a highly digital world which we are in today, banking is expected to be digital and real time. And I think that expectation has now set a very high expectation on resilience of the IT system, which maybe was not 10 years ago. And to what sir was saying, right? The trust is that a banking service will be available to me when I need it. And that is the promise. For that promise to sustain and remain, it is very important that all systems are resilient. So I feel this question of resilience is no longer restricted to a cyber security or an infra team. It is about every application of the bank now has to have resilience as a core principle when we are launching it. And therefore, this is not a training of having separate resources who are now, InfoSec compliance professionals. But as we move into this fully digital world, all your digital teams needs to have skill training to enable every single application of the bank, which as a definite DNA principle thinks about resilience first. And that has to be the approach in my view.
Absolutely, couldn't agree more. But thank you so much for the superb insights. Really helpful, I guess, for the listeners as well. I think three key insights or takeaways for me rather would be, like you mentioned, back to basics. I guess is point number one. Clear collaboration models between banks and suppliers is the second one. And I guess the skills development part, which is first acknowledging the gap and a conscious effort towards closing it, would be my three key takeaways. But I'm sure it was a sort of helpful discussion. Thank you so much.
Thank you.
Thank you.
Thank you, panelists, for the insightful discussion on the topic. May I request you to stay for a moment for a group photograph, please? Thank you all.
Bank, the applicant, and the beneficiary. There are some key advantages of electronic bank guarantees. On the NESL EBG platform, banks can digitally stamp and sign documents, issue BGs instantly, store and manage BGs digitally, and prevent fraudulent BGs from being issued. NESL EBG has some unique capabilities to manage the BG after issuance, with actions such as amendment of BG, renewal and extension of BG, extend or pay BG, invocation of BG, and cancellation or closure of BG. Move to NESL's EBG platform. Serve your business customers faster and digitally in a paperless fashion.